technology startups have found tough going in the recession and the slow economic recovery. We want to take a look now at what 2011 may look like for the venture capital industry. Our next guest says that slashed R&D spending by bigger companies could mean a rebirth for smaller ones. Joining us now from San Francisco is Mark Jensen, managing partner for U.S. Venture Capital Services at Deloitte Touche. He also heads the firm's risk auditing group for the tech industry. Mark, thanks for the time today, and tell us why 2011 may be there may be signs of improvement in the offing for the venture industry.
Well, thanks, Peter. I do think that 2011 is going to be an interesting year. I think it's going to be a year where the tech industry rebuilds. I think you're going to see structurally the limited partner community start to become more interested in venture capital again. I think we'll see a few very large IPOs this year in the tech sector. That's going to re-energize the whole sector, re-energize the venture capital community, and really bring some attention back to the sector.
Some of that money's been really hard to come by in the last year or so. Tell us what's going to be different this time around. Obviously, people making some very tough choices as they move forward in the venture capital community, looking at startups and things like that. How is this going to be different than, say, a few years back?
I think the venture capital community, like everything in the economy, has had a liquidity crisis. The limited partner community has not had capital to invest in venture capital. They've had their own liquidity crisis they've had to work through. I think fundamentally they've worked through a lot of that. There is a lot of capital that still sits on the sideline looking to come into the venture capital sector. I think what they're waiting for is really to see a resurgence of the IPO market. The IPO market really has been fairly flat, as you know, over the last 2 or 3 years. The limited partner community needs to see returns. They need to see returns coming out of the initial public offering market. That has not happened yet. It will happen, I believe, this coming year. And I think you'll start to see the limited partner community free up capital back into the venture capital sector. I think the one thing that I think we always have to remember is innovation is constant. The economy goes up and down, companies come and go, but innovation is the one constant factor that you see in the technology sector. Technology companies can't sit still. If they sit still, their competitors gain on them, and consequently they just start to flounder and they start to go out of business. So what you're seeing now, I think, is the broader technology industry, the companies themselves, being very focused on investing in new technologies, if you will, reloading their own technology stacks. And you're seeing a very, very heady market, I think, going into 2011 as it relates to mergers and acquisitions. The venture capital community obviously needs mergers and acquisitions, but they also need a very active, very vibrant IPO market. Once you see those things happen, you see the capital start to come back to the sector. The traditional limited partner community.
Let me jump in and just ask you. Let me just jump in and ask you, with the focus on Groupon recently, Facebook, what's been going on right now, there is at least some discussion in Silicon Valley, is there not, that there may be a valuation bubble here. What do you make of that debate?
Without talking about any specific company, I think valuations are always difficult in the venture capital industry and in the startup world. I always say companies are either worth a lot or they're worth nothing, and the difference is how they're perceived in the market, and the difference is how they're perceived, how their outlook for the future is. And so I think valuations are always difficult to comment about. I think that what you are seeing, though, with a number of companies in Silicon Valley is there's a lot of interest in the private sector to invest in these companies. So you're seeing a lot of these private exchanges start to emerge, where some of the insiders and some of the employees of these companies have been able to sell stock on these private exchanges to other investors. What that says to me is that there is a lot of interest in investing in the technology sector, and I think that we're seeing that interest now in terms of private placements. I think you're going to see it in the coming year in terms of the IPO market.
Do you think the SEC looking into that private placement issue, some of those private shares, is that in any way going to have a chilling effect on Silicon Valley?
I don't think so. I think that the Silicon Valley community tends to, again, it's a very innovative community. It's going to continue to move forward. I think that there's always the Valley is always looking for a way to, I think, capitalize on innovation and help their employees capitalize on innovation. I do think the SEC's inquiry into those exchanges, will certainly, it'll get a lot of attention in 2011. That's for sure.
Let me just ask you finally, if I could, as you look forward to 2011, in terms of big ideas coming out and staffing as well, are these folks going to be able to find the talent they need, given what's out there in terms of hiring?
I think I do think they will. I think one of the things that you see in Silicon Valley is the ability of the workforce here to move between technologies. One of my tests of whether Silicon Valley is doing very well or not is how long it takes you to get up and down 101 between San Jose and San Francisco. And I can tell you from personal experience, it's taking a lot longer to get up and down 101 these days. So that tells me companies are hiring, people are going back to work, and these companies are staffing up. So, I think go ahead.
Mark, we're short on time, but listen, really appreciate yours today, coming to us from San Francisco. Mark Jensen of Deloitte Touche, taking a look at startups in the venture capital industry into 2011. Appreciate it very much.
Thank you, Peter.